Get Rich Slow with John Wolf. Hey, I'm a mortgage loan officer in Oregon and Washington. So if you're interested in getting a refi or a purchase, love it if you'd contact me. Also, like, share, and subscribe to this video. Anyways, I've been asked a lot recently about how long can I lock a loan for? What's the difference? And what are basis points anyways? And what's that got to do with interest rates? So I'm going to try to take a really quick dive through a bunch of topics. And I'm also going to show you what the bond market is doing right now today, because it's crazy. Anyways, loan officer in Oregon and Washington, here's my info. And so I just took the same loan details and I took a look at exactly what the lock looked for different time periods. So this is a 15-day lock for this hypothetical person. Again, this is absolutely not your quote. And this is not a great quote at all, but it illustrates the point well. So at this interest rate, if you do a 15-day lock, then I have to actually pay the client $815. If that same client, we do a 30-day lock, which is normal in a purchase when things aren't busy in the industry. But if you want to do a 13 lock, I would have to pay the client $333 for the exact same interest rate. Now, sometimes 15% or 15-day lock is more expensive than a 30-day lock, but usually it's cheaper. Now, let's talk about a 45-day lock. So right now, the 45-day lock is actually cheaper in that I have to pay the customer more money to take it than the 30-day lock is. So why would you ever do a 30-day lock? This is the kind of stuff I do to save my customers money. 60-day lock, I've actually never seen this. At 60-day locks, zero money changes hand. So I don't have to pay the client any money to take a 60-day lock, and the client doesn't have to pay me money. Now, sometimes the 60-day lock is more expensive than the 30-day lock, and sometimes it isn't. The difference has to do with hedging, which is a topic all of its own. And this is a 90-day lock. 90-day lock is almost always more expensive than the other locks. And if the same client wanted to get the same lock for 90 days instead of 60 days, he would have to pay me $1,800. That's compared to paying me $0 for 60 days. And that's relatively normal. The amount varies hugely depending on the day and the market conditions, however. So again, that you can see the 90-day lock. Okay, now I want to talk to you about the craziness the bond market is doing today, because what we're looking at here is the 30-year mortgage-backed security. So this is sort of the wholesale side of your mortgage, because what happens is you buy a house, I originate your loan, I package up all the paperwork, and then it gets insured. And after that, it gets sold as a bond, as a mortgage-backed security. So this is the price for the bonds as mortgage-backed securities. And this fluctuation is huge. It's showing up at the top corner there, 200 basis points. When we were talking about the different price for the locks, like this is 0.375 and this was 0. Instead of a 0.3, we're talking about a 2 there. So that's a ton of money. And I just want to show you over time. On February 24th is when I saw what was going on in the markets, and I called all of my previous clients and locked them all in for refinances over the next couple weeks. The lowest interest rates that I have seen in my, honestly, not super long career, but happened for about 1 hour in the morning on Monday the 9th. And then by the time that we got to Friday, the mortgage-backed securities increased by 270 basis points. And if you see right up here on the left, this little caret, I pay for a service, and I got a phone call that's basically like, hey buddy, lock any loan you have right now, bye. And I only had one this entire year before this period, and I've gotten 4 of those, because you see the rates were fantastic, then they went down as higher interest rates on loans, just so you know. They went down a bunch, and then they're down a bunch again, and then this morning, they went down a ton. So these indirectly affect interest rates because there's a couple layers in between, but bottom line, interest rates now are even to what they were, way back in January, and they had They were so much lower for a minute. Now, I think this turbulence is going to continue for a while. That giant green bar you see here is when the Federal Reserve said that they were going to dump $200 billion directly into mortgage-backed securities, and then realistically about another $400 billion over the next couple months. And that was good news for a minute, but the question that came after that is who's going to buy these bonds after the federal government? And that giant red bar tells me that nobody knows the answer to that question right now. Finally, I just want to show you the relationship between interest rates and basis points. So if you see a 1 on this sheet, that's equivalent to 100 basis points. So that 2 over here on the top left matches, well, there's no whole number 2 in this second column, but the first column here is interest rates. The second column here is how many basis points you need to pay or get paid for that. And then on the right-hand column, and I won't tell you about the loan amount and stuff like that because I'll get in trouble, is what the monthly payment resultant from that difference would be. So anyways, if you see here at 4.875, I would have to pay the client money to take the loan, and then at everything lower, the client has to pay something, but you notice it's really not smooth. So you have to pay a little bit, you have to pay more, you have to pay a lot more, you don't have to pay quite as much as before. And then, the sweet spot where I'd probably lock a client, I would probably lock most clients right here if I had to do it today. My real advice is we should not be locking today. My real advice for clients is that I want a whole application, I want everything in there so that when the rates get lower again, I get that emergency phone call and I lock 7, 8, 9 clients' loans, just write that in 20 minutes. And I don't have time to call a client and ask them if they're happy with that particular lock. It's usually I don't act like a day trader. I don't have to pay attention to the market on a daily basis, but that's different right now. My usual value proposition for clients is I can get loans done that a lot of people can't, and I can get complicated loans done in a way that made them look easy that other lenders denied. But in the next couple months, I'm going to also have to, act like a day trader and watch the market all the time. Finally, I did just want to let everybody know this isn't what all interest rates look like. Here's the source that I get this is actually the source where I get my second lowest interest rates and probably the best deal because it's absolutely the lowest fees of anything I show. It's from the ODVA from this morning. So, it's possible if you qualify, and I'd say 7 to 10% of Oregonians qualify, you could be getting this, sweet 2.875, while people who don't qualify today, at least, are looking at these ugly numbers. Anyways, like, share, and subscribe. I hope you found this video interesting. Please ask questions. That's how I figure out what to talk about next. Have an awesome day. Bye.